Right. So we have completed with the chapter on the company accounts and audit, wherein we discussed regarding the declaration and the payment of the dividend, then 5 days, 30 days, 7 days, then 90 days, then 7 years, 18%, 12%, and a rate of interest and all to be paid. Then we studied regarding the salient features of the LLP audit over there, and then started and almost about to finish with the next chapter over there, which is regarding the liabilities of the auditor. So liabilities of the auditor, we have them under the Income Tax Act and under the Companies Act. Under the Income Tax Act, we have section 288, 278, rule 12A and 271J. And under Companies Act, we have the civil liabilities and the criminal liabilities. Okay. Under civil liabilities, we have two. One, damages for negligence. And okay, inclusion, you remember the wording, so complicated wording, oh my God. Inclusion or omission of any information is misleading, and any person has suffered any loss or damage, right? Sustained any loss or damage, then every person, and nobody will understand this. Dare if anybody understands this. This is our code word. You understand? No, inclusion or omission of any information is misleading and has sustained any loss or damage. Every person, right, who is a director, who's agreed to become a director, authorized to be a director, is a promoter, has authorized the issue of the prospectus, or is an expert, will be liable to pay compensation to every person who sustains such loss or damage. Are you understanding that? However, no person will be liable if they withdrew their consent before issue of the prospectus, or they gave a reasonable public notice, or they had the reasonable ground to believe. And again, CA will be liable, expert will be liable only when he is given the written consent for the issue of the prospectus. Only when he is given the written consent for the issue of the prospectus. And then under the civil liability, we had the second one over there. What was the second one? Liability for misfeasance. Misfeasance is what? Breach of trust or duty. That CA breached confidentiality. CA did not issue engagement letter. CA did not prepare audit plan. So what is all that? Liability for misfeasance. That is the breach of trust or duty. Right. So now we come to the liabilities under the criminal liabilities under the Companies Act. What we have discussed is the civil liabilities under the Companies Act. Now we need to discuss regarding the criminal liabilities under the Companies Act. Okay. Now civil liabilities, what was the first heading? Civil liabilities, what was the first heading? Damages for negligence. But even though the heading was damages for negligence, was it something related to the prospectus only? Though the heading in the study material of ICAI is damages for negligence, is it related to the prospectus only? Yes. And if I look into the criminal liabilities also, what does it say? Misstatement in the prospectus. But now it is leading to the criminal liability, the misstatement in the prospectus. So now for the criminal liability, right? So one, we have the civil liability, right? Civil liability for the misstatement in the prospectus, right? Civil liability for the misstatement in the prospectus. What does it say? Our code word, inclusion or omission of information is misleading, has sustained any loss or damage. Every person who is, yes, who has, what you say, is a director, who is an expert, will be liable to pay the compensation to every person who suffered such loss or damage, will be liable to pay the compensation. Now we are talking about the criminal liabilities. Now we are talking about the criminal liability for the misstatement in the prospectus. And again, what does it say? Inclusion or omission of any information is misleading. Do you see it over there? Inclusion or omission of any matter is likely to mislead. Again, what does it say? Every person, same to same. Every person who authorizes the issue of the prospectus shall be liable. But now what does it say? Liable under section 447. So that is the difference between the civil liability for misstatement in prospectus and the criminal liability. Civil liability is discussed under section 35. Criminal liability is discussed under section 34. Right? Nobody will understand IOMLDEP. Nobody. Not expected also. But if you make an attempt, if you also look at it after 15 days or after 15 minutes also, you say, what is this? And so what is this? You have to open the textbook. Okay, you have to open the textbook and see, inclusion or omission of any information is misleading and has sustained any loss or damage, then every person will be liable to pay the compensation, right, to every person who suffered such loss or damage. And criminal liability, again, what does it say? When a prospectus, right, where a prospectus has been issued, circulated or distributed under this chapter, includes any statement which is untrue or misleading in the form or context in which it is included, or where any inclusion or omission is likely to mislead. So again, inclusion or omission is likely to be misleading. What does it say? Every person who authorizes the issue of the prospectus will be liable under section 447. There, what did it say? Liable to pay the compensation. Here, what does it say? Liable under section 447. And when not liable, when had reasonable ground to believe. So this point we had it under the civil liability also, right? This point we had it under the civil liability also. Are you getting that? Damages for negligence is also misstatement in prospectus. Under civil liability, what is this called as? Damages for the negligence. But is it related to the prospectus only? Yes. And then you have the criminal liability. Inclusion or omission is likely to mislead. Every person shall be liable under section 447. In the criminal liabilities, do you understand the first one? Misstatement in the prospectus. And what is the second one? False particulars or the omission of a material fact. And there we have this wonderful section 448. Right there, what section we have over there? We have the, right there, what section we have is the section 448. Zala. Right there, what section we have is the section 448, right? What is section 448 over there? Amazing drafting of section 448. What does it say? In any, we have three any's over there. Right, we have three any's over there. What is the first any? In any return, report, certificate, financial statement, prospectus statement, or any other document. है ना, in any return, report, certificate, financial statement, prospectus statement, or any other document. It says if we forgotten anything, document, right, required for any of the provisions of this act or the rules made there under. So that is the second any. And what is the third any? Any person makes a statement. Right, so in any return, report, certificate, financial statement, prospectus issued under any of the provisions of the act or the rules made there under, any person makes a statement which is false, knowing it to be false, or omits a material fact, knowing it to be material. Again, where is the heaven over here? Shall be liable under section 447. Right, shall be liable under section 447. So which is false? In any material particulars, knowing it to be false, or omits any material fact, knowing it to be material. What is also coming to your mind, or what should also be coming to your mind? Clause. Yes, clause 512 and 612 fails to disclose a material fact, fails to report a material misstatement. And fails to disclose a material fact and fails to report a material misstatement. What is section 448? In any return, report, certificate, financial statement, prospectus document issued under any of the provisions of the act or rules made there under. Right, and any return, report, certificate, financial statement, prospectus document issued under any of the provisions of the act or the rules made there under, any person makes a statement. Any person makes a statement which is false, knowing it to be false, or omits a material fact, knowing it to be material. So one, what you are telling is not true, or second, you are not telling it at all. Both of it is a fraud. Shall be liable under section 447. Can you do the reading of section 448 once with me? What does it say? Everybody, please look over here. In any return, report, certificate, financial statement, prospectus document issued under any of the provisions of this act or the rules made there under, any person makes a statement which is false, knowing it to be false, or omits a material fact, knowing it to be material, shall be liable under section 447. Right, so what did we say in criminal liability also? Shall be liable for the section 34, will be liable under section 447. Here also what we are saying, will be liable under section 447. So now we need to study the section 447, which is regarding the punishment for fraud. Right, now we need to study the section 447, which is regarding the punishment for fraud. Section 447. Are you getting that? Shall be liable under section 447. So now we need to study the provisions of section 447. Okay, right. What does it say? If any person is found to be guilty of fraud, right, then what does it say? Without prejudice to any liability, including repayment of any debt under this act or under any other law for the time being in force, any person who is found to be guilty of fraud involving an amount of at least 10 lakh or 1% of the turnover, whichever is less. Right, so 10 lakh or 1% of the turnover, whichever is less. Right, so example, 10 lakh or 1% of the turnover. Are you getting that? 10 lakh or 1% of the turnover, whichever is turnover, whichever is less. Say 10 lakh, 1% of turnover is coming to 5 lakh. In that case, you will take 5 lakh. Say 10 lakh and 1% of turnover is coming to 5 crore. Then how much you will take? 10 lakh. So on the higher side, it can be 10 lakh. Understanding now, if 1% of turnover is less than 10 lakh, then that lower figure. Otherwise, it is going to be 10 lakh. Otherwise, it is going to be 10 lakh. So say 10 lakh you take and 1% of turnover, example is 5 lakh. Then what figure you will take? 5 lakh. And when 1% of turnover is 5 crore, then what figure you will take? 10 lakh. It says if it exceeds this amount, means it exceeds 5 lakh or 10 lakh in my example. If it exceeds 5 lakh or 10 lakh in my example, or if it is less than 5 lakh or 10 lakh as in my example. Are you getting both the situation? Okay. What does it say? If it exceeds that amount, what does it say? Involving an amount at least which is rupees 10 lakh or 1% of the turnover, whichever is lower. So lower of the two, but it is exceeding that amount. That means simple language, it is exceeding 10 lakh. Most of the cases. Then what does it say? Punishable with imprisonment for a term which shall not be less than 6 months, but which may extend up to 10 years. So 6 months to 10 years. And shall also be liable to fine, which shall be at least equal to the amount of fraud, which may extend up to 3 times the amount involved in the fraud. This is amazing. You understand now, it's not like 25 crore fine or 500 crore fine or 200 crore or 100 crore fine. What does it say? If you have done a fraud of 7,000 crore, what is the minimum fine you need to pay? 7,000 crore, like in case of Satyam. And then what does it say? Which may extend to 3 times the amount involved in the fraud. That means can it go up to 21,000 crore also? Yes. Right? That means it can go up to 21,000 crore also. Okay. And if the fraud which has been done, it involves the public interest. If the fraud which has been done, it involves the public interest, then the minimum period of imprisonment is going to be 3 years. Right? So if it is public interest, then what is the minimum period of imprisonment in that case? It is 3 years. And if the fraud is lower than the amount prescribed above, are you able to understand that? It is less than 10 lakh or 5 lakh. Then what does that say? 5 years imprisonment or 50 lakh or both. Right? 5 years with or with fine, which may extend up to 50 lakh or both. Right? So here what does it say? 5 years or 50 lakh or both. Right? Or both. Is it clear to everyone? Right? That is the punishment for fraud under section 447. Right? So if fraud exceeds 10 lakh or 1% of turnover, whichever is lower, or fraud does not exceed 10 lakh or 1% of turnover, whichever is lower. If it does not exceed, then 5 years or 50 lakh or both. And if it exceeds, then what does it say? Minimum period of imprisonment 6 months, which may extend up to 10 years. And it is the amount of fine at least equal to the amount of fraud, which may extend to 3 times the amount involved in the fraud. And if the fraud involved is in the public interest, then what is the minimum period of imprisonment? Then the minimum period of imprisonment is going to be the 3 years, right? When we were seeing this question over here, what does it say? As an auditor not appropriately dealing with the misstatement appearing in the financial statements of 9.84 crore, right? Misstatement does not involve the public interest. So if it does not involve the public interest, then what do we say? Right, at least equal to the amount of fraud, which may extend to 3 times the amount involved in the fraud, and minimum period of imprisonment in that case will be 6 months, but which may extend up to 10 years. Are you getting that? Thus, in view of the above, Mr. X will be held liable for the criminal prosecution for not appropriately dealing with a misstatement of 9.84 lakh appearing in the audited financial statements, though the misstatement does not involve the public interest, and assuming that it was known to the auditor. Right, so had we seen the first part of the question? Yes. Second part of the question was from the Companies Act 2013, the criminal liability for the misstatement in the financial statement. So one is what? This is misstatement in prospectus. And what is the second one? Second one is misstatement in the financial statement. So one is misstatement in prospectus and second is misstatement in the financial statements. Are you able to follow that? Yes. Let's come to question number 1. Mr. A newly qualified chartered accountant, started his practice and wants to specialize in the audits of the corporates and requires your advice on the criminal liabilities of an auditor under the Companies Act. Kindly guide him or briefly explain the criminal liabilities of an auditor under the Companies Act. Right? So direct question regarding the criminal liabilities. What you have to write down? Misstatement in the prospectus and misstatement in the financial statements. And then after writing section 34 and section 448, you have to write down section 447, which is the punishment for fraud. Is it clear to everyone? Right. Next one. State the nature of liability as provided in the Companies Act of an auditor for not appropriately dealing with a misstatement appearing in the audited financial statement or a false statement in the audit report. So now we talk about section 448 and after that section 447. So that's a retail question. Question number 1 was wholesale question regarding the criminal liability. Question number 2 is a retail question from the criminal liability, only talking about the misstatement in the financial statements. Next question. Indicate the precise nature of the auditor's liability in the following situation and support your views with authority, if any. A misstatement had occurred in the prospectus issued by the company, or the liability of the auditor under section 35 for making an untrue statement in his report as an expert forming part of the prospectus. Now, misstatement had occurred in the prospectus. This also comes under the damages for negligence in the civil liability to pay compensation, and it also comes in the misstatement in the prospectus in the criminal liability. So we have to write the part 1 of civil and part 1 of the criminal in this answer. Are you able to follow this, everyone? Okay, right. And then next question, question number 4. As a part of the listing process, Messrs. Fraud Limited had prepared and issued its prospectus to the public. The top executives thought that a pending litigation against the company, which could cause a cash outflow of 1 crore, may affect the demand for the share application. Due to this, they had omitted the fact. Oh my God, fails to disclose a material fact or omits a material. Yes, what does it say over here? Makes a statement which is false, knowing it to be false, or omits a material fact, knowing it to be material. And omits a material fact, knowing it to be material. Right? Due to this, they had omitted the fact for the well-being of the company. Mr. K, who was very well aware of this matter, has authorized his name to be issued, authorized himself to be named in the prospectus as a director. However, Mr. K was little reluctant, so he informed and agreed that he shall become a director after an interval of some time. But still, will he be liable? Yes, what did we say? Agreed to become a director. You remember that? Agreed to become a director. Unfortunately, after a few days, this matter got leaked and several subscribers sustained the huge loss. Why? Because what did we say? No damages without the losses. Mr. K is now defending himself, stating that he's currently not holding the director post. Hence, no action can be taken against him. Right? So, what do you need to write down is the damages for negligence and also the section 447, which is the punishment for the fraud. In this case, K is liable for punishment even even though he is currently not a director in the company as per section 35, he shall be liable to punishment as per section 447 discussed above. You need to write the content, as he was aware of the litigation against the company, which may cause outflow of rupees 1 crore, which may affect the demand for the share application, and he had also authorized himself to be named in the prospectus as a director. Right, so he said, after a few days, I will become a director. So he had agreed to become a director of the company. Are you getting that? Right, so that is our small chapter and our small question bank for the chapter of the liabilities of the auditor. Okay, so again, without bias to any religion, just because I know that example, I'm giving that example over there. Okay, when the bridge had to be built between India and Lanka. Lanka, that God Rama had to go over there to bring Sita from there. Okay, so then these the entire team over there, right? They were picking up these big what do you say, blocks of stone, and a big stones, and they were putting it in the ocean in order to build the bridge. They were putting these big blocks over there. If you see any mythological series, you see over there also on each rock it is written, and then after that they throw it into the ocean and they are building the bridge over there. Okay, and then what happens? It is shown. Now, I don't know really whether it happened or no, but it is just as an example I'm talking about it. Right, so what happened, that these big rocks are being thrown in order to these big rocks are being put into the ocean in order to build the bridge, and it is so shown, or it is so red, I don't know how it, whether true or whatever. What happened, that there was a squirrel also who was there near the bed of the ocean, and what that squirrel was doing, now squirrel, such a small creature over there, and that small creature over there, even that was collecting little mud, and that also it was putting in the ocean. Now those people, other members of the team, they were putting these big rocks over there, and the squirrel over there is doing what? It is putting the small, how much mud a squirrel can keep one time in its hand, and that it is putting it in the ocean over there. So somebody asked the squirrel, okay, squirrel, what significance? What is the significance of this small? How is it going to matter? It says this is very important. This is keeping all the stones together. You understand, no? The mud which I'm putting over there, it is keeping all the stones together over there. And then it's so said, I don't know. It is said that, the Lord, the God, he patted the squirrel, and that is why you always see the 4 fingerprints over the squirrel. And so, anyways, we don't have to discuss mythology or philosophy or anything. What I mean to say over here, okay, these chapters are like the squirrels. So don't call it squirrel chapter. You understand, no? But yeah, these chapters are like the squirrel. They also play their role in your getting of the marks in the exams. You rely on the chapter on the auditing standards, ethics and all. But after some extent, you know that there are some inherent limitations over there. So this chapter, question came in exam, criminal liability. You wrote as it is, the question answer which was there in the book, in the study material of ICAI. You got a 3 out of 4 over there. 4 out of 4 is hypothetical. Okay, so you get a 3 out of 4 over there. Right, so you get a 3 out of 4. So that's so luxurious. That is so great over there. Right, so you have to look at it. Some big answers. Ethics is like one big block over there. But some are like these muddy answers. Small chapters and questions and concepts over there. And it's just like that annual return. It is Form 11. MCQ, one question came. And so now you know annual return, what it is Form 11. And statement of accounts and solvency, it is the Form 8. Right, so again it contributed, it gave you 1 mark. And now what we have to do, you remember, and I don't know again whether it happened in your school days, they used to tell us to collect the funds. You understand, for some particular charitable thing or so. And then you have to go door to door knocking, you had one form with you. And with that, you had to go door to door. And then, they used to give you 1 rupee, 5 rupees as a contribution and so. I don't know if you have experienced that. Okay, 1 rupee. So many a time, so you used to feel so embarrassing or, so lack of confidence. You used to put the name of your family members only. And 10 members from your family members only, 5 rupees each, and take 50 rupees from mother and show it that, okay, this is the amount which has been contributed over there. But, that showed the significance that, even a 1 rupee to be collected or a 2 rupee to be collected, or even for a small child, when you put the habit of, collecting the money in in the piggy bank and then saving the money and telling him to, and taking him to a bank to open his bank account and telling him to deposit the money in the account. What are you doing? You're inculcating the habit of saving, of not spending the money, of reserving. Right? Every money that you don't spend is the money which is earned by you. You understand? So that is why over here we are talking about these small chapters, these small questions, which will make a big difference in our audit paper, right? Knowingly or unknowingly. In group one, audit happens to become the villain. In group one, willingly, unwillingly, knowingly, unknowingly, it is audit which generally becomes the villain. Why? Because FRSFM, manageable, law is your favorite, audit is the one which has all the burden. You understand? Audit is the one which is having all the burden. And then what you do now, in the first attempt, you take audit for granted. Is there a audit? Your attitude, you look at it, you know how you look down on certain people. Audit, sit down. Sit down. Okay, then next attempt comes out the Vishwaroop of audit. You understand? No, the big formation, incarnation of audit comes out over there. It says, previous attempt, you gave me stepmotherly treatment. You gave me stepmotherly treatment. Now you will say, no, you are my most affectionate child. No, you are my most favorite child. You'll change it into that over there, right? So I am telling you, don't like any subject too much. Don't hate any subject too much. Be objective. And we have nothing to do, whatever it is with that subject. You are, our deal with the subject is 50 marks. Boss, you're going to give me 50 marks, I'm ready to do whatever is required. Not giving me marks, don't talk to me. I don't have time. I'm doing CA final. Tell it, yaar. Be objective. Anyway, you say, ma'am, I'm enjoying company law. I'm enjoying company law. That is why I'm studying the bare law again and again. That is why I'm seeing case studies. Arey, why? That you can do later. I have no problem with you doing that. Or say you're liking the auditing standards. That's not possible. But say you're liking the auditing standards. And then you're saying, oh ma'am, I'm studying the BEAR Act. I'm reading the BEAR standards on auditing over there. All pronouncements of ICR. SFM ma'am, portfolio management, so interesting. I bought one foreign author book, such a thick book. In that such a thick book, there are 300 problems. I'm solving all of those. Array God, you don't even know in which direction to make efforts in life. And you are doing effort, but donkey work, not monkey work. And 100% donkey work is being done, no monkey work. And as a CA final, so much of syllabus, so much of subject, you should be smart like a monkey over there, knowing what to do. Even a monkey knows that he has to peel a banana and eat. So even you should be knowing, this chapter I need to study, this is what I need to do, writing practice, I need to do MCQ and all. Right, so we completed with standards. Is it done? Right, we completed with risk assessment, only risk assessment, internal control pending. Okay, we completed with guilty. Professional ethics, right. Then we completed with clause 1 to 21 of CARO 2020. Right, then we looked into the sections of the company law, section 123 to section 148. I think that was our range. 123, declaration and payment of dividend, up to section 148, which was regarding the cost audit, and maybe we went to section 177 also, which was regarding the audit committee. So that was our range of going into the sections. Then saw this small chapter, liabilities of the auditor, squirrel chapter. And a squirrel, we'll name it a squirrel chapter. Okay, doesn't matter what's in the name, Shakespeare has said. Okay, right. So anyways, we have the liabilities under the Companies Act and liabilities under the Income Tax Act, and civil liabilities and the criminal liabilities. Okay, now we come to a different era of chapters in your syllabus. That is now coming to the chapter on the SEBI LODR. That is coming to the chapter of the Audit Committee and the Corporate Governance. Okay. Right, so coming to the next chapter over there, which is regarding the Audit Committee and the Corporate Governance. Okay, again, how is our question bank? Is it like a nominal question bank or is it like a studded one? 100% it is going to be a studded one, right? Studded with how many questions over there? 34 to 35, right? 35 questions in the question bank, right? When we are talking about the SEBI LOD are the audit committee and the corporate governance. And it has been so heard of that in one of the recent exams, oh my God, what mistakes they will do. है ना? They will copy paste auditor certificate over here, write auditor certificate over here, but not change it to question bank. Copy paste is a big problem in life. You understand? Okay. Right. So anyways, question bank that is over there. Okay, so that will be taken care of in the next edition. Don't worry. Okay, unless and until they do some new mistake over there in the formatting. It goes on. It's a lifetime process I've been going through. Okay, anyways, some or the other, how much ever effort you put into, fine tuning or, avoiding the errors in the book, some or the other formatting here and there goes. But overall, it's reasonable assurance, if not absolute assurance. I hope the color, I wanted your views also regarding is the font and everything and the presentation format of the book okay? In between, students had a concern. I changed the font. You have to experiment with the font also. Then I started putting the lines also. So I thought of putting line, it made the book so clumsy. So many lines in the book. And then the handwritten notes type. I said, no. Handwritten notes, no. You prepare your notes on your own. No. Right? So this seems to be a very neat and clean format over there. Okay. Right. So now coming to this next chapter. In case if you have a dream of becoming a listed company, what you need to comply with is that you need to comply with the SEBI listing agreement. And in the SEBI listing agreement, there is a code of corporate governance which has been given in the SEBI listing agreement, right? What is corporate? Company. And governance means control. Governance means control. It means management. So the company being managed, governed in the best interest of the stakeholders is the concept of the corporate governance. The company, corporate, being governed in the best interest of the stakeholders is the concept of the corporate governance. And who is responsible for the governance of a company? The board of directors, the management, the TCWG. Why? Because there is a gap between the owners of the company and the runners of the company. Who are the owners of the company? The shareholders. And who are the runners of the company? Who are running the show of the company? The management, the board of directors. Right? So who is going to be responsible for the governance of a company? The board of directors. That they should run the company in the best interest of the stakeholders. At board of directors, are you running the company? Yeah, but should you run it in your best interest? No, you should be running it in the best interest of the stakeholders. And in the stakeholder, which is the most important stakeholder over there, the shareholder. Right? It includes debtor, creditor, supplier, regulator, everybody. But most important over there is the member, the shareholder of the company. So company being run by the management in the best interest of the stakeholders is the concept of the corporate governance. And obviously, when can you have the best corporate governance practices? When there is transparency in financial reporting. If you don't have transparency in financial reporting, you're doing fraud in financial reporting. How can there be the transparency, or how can it be in the best interest of the stakeholders? If management, board of directors do a fraud, will you say that there is good corporate governance? No, you will say that there is very bad corporate governance in this organization. And you know the irony of the situation? And irony, something which is opposite to what is the reality. Okay, Satyam, 2009, fraud was confessed. Satyam, 2009, fraud was confessed. In 2007, they got the best corporate governance award. You understand? So sometimes an award, no, don't judge a book by its cover. As simple as that. Okay, so they got the EY Peacock, some Peacock or corporate governance award or something they got over there. And 2009, you come to know the feathers of the peacock. You understand? Okay, what are the black colors of the feathers over there, and what is the fraud which has been happened in the company over there? Okay, right. Again, this is all understanding of the corporate governance, which technically is also called as the SEBI LODR. What is LODR? The SEBI Listing Obligations and Disclosure Requirement Regulations of 2015. SEBI, Securities Exchange Board of India, listing obligations. So if you want to get listed, these are the listing obligations and the disclosure requirements, right? And listing obligation and the disclosure requirement regulations, right? So LODR regulations 2015. Time and again these regulations keep on undergoing an amendment. Okay, they keep on undergoing. This is one chapter which is very, very dynamic. It keeps on getting amended. And it keeps on. Every attempt, every RTP, you see SEBI LODR, there is some change. SEBI LODR, there is some change over there. Continuously. This is one of the chapter I've maximum updated it in the book. Because every time I look into, there are some amendment rules which have come. SEBI LODR rules 2022, SEBI LODR rules 2023. Right? They keep on coming. The SEBI LODR amendment rules over there. Right? So you need to keep a track. Don't get too much into the craziness of, what is the amendment and what is it. Base of the chapter remains the same. Little bit 5, 7, 8, 9, 5, 7 things or little bit small concepts here and there, they move. Okay, students, they put their life into the amendments. Amendment maximum it will come for 5 to 10 marks. And you need to bother about the other 10 marks of the paper, or other 90 marks of the paper also. And what happened, recently it has been heard that in the MCQs of ICAI, they asked a 10-mark MCQ on the entire chapter of SEBI LODR itself. Right? So that is again one big threat, or that is again one very potential style in which institute can ask the question. Okay, you may not see a question in the theory part of the paper, but they can check it for you at the micro level what concepts you've understood by asking you in the MCQ part of the paper. So that is why every word, every sentence, every concept, every provision that we listen to, we have to listen to it very, very carefully. Like, when I was talking to you about the auditor's expert, and I talked to you about KBC, and then Kaun Banega Karodpati, that particular game show over there. And there a contestant, he's asked some question on mythology or some question on cricket or some question on politics over there. Cricket or politics or mythology, those type of questions. Any game show you might have seen, like the Bonvita quiz or something like that also. These type of questions are asked. Okay, and say the question is for 50 lakh or 75 lakh or, some the high of 12 lakh 50,000 or so. And then now what the contestant says, Amitabh Bachchan keeps on telling the contestant, if you're not sure, you can take a lifeline or you can quit the show or, keeps on telling him. But the contestant says, no, I remember that in 1990, this person was the prime minister, and at that time, this person had won the Olympic medal, or this had happened at that time, or that particular Olympics were held in that particular country. So what, it is not that that person has read it yesterday. It is not that that person happened. If you read it yesterday, it's a coincidence that you read it yesterday and today it came in your KBC quiz. Okay, but another possibility that you read it, you heard about it somewhere in the class, or you read about it somewhere in the class. And then now when you see the question in the exam, immediately it clicks you then. Like yesterday I told you for 143 1C. Right, 143 1C is what? Where the company is not an investment or a banking company. Where the shares, securities, debentures, have they been sold at a price less than the price at which they were purchased. So now you've heard, where the company is not an investment or a banking company. So investment banking company, do you need to do this inquiry? No, for investment banking company, there is no need for you to do this inquiry. So somewhere you should have heard about it. If you've not heard about it, then how will you know? Then you will go by logic. And when you go by logic, you fail. Because logically you will think, oh yes, we need to inquire, or general knowledge you have. With general knowledge, again, you will fail. What you require is the expert knowledge. What you require is the specific knowledge which is required over there. Okay, right. So now coming to the SEBI LODR, also called as the Code of the Corporate Governance. And who is responsible for the governance of a company? The board of directors are responsible for the governance of the company. And these board of directors, they constitute several committees. What are the several committees which are constituted by the board of directors? First one, our most favorite committee over there, is the audit committee. Right? Then they also need to constitute the stakeholders relationship committee. Right? Then they also need to constitute the stakeholders relationship committee. Right? Then it also says that some listed entities, they need to constitute the risk management committee. Right? They need to constitute the risk management committee. Are you all with me? right? The risk management committee. Yes, then it says listed entities, you also need to formulate the nomination and the remuneration committee. You need to form the nomination and the remuneration committee. And if section 135 is applicable to you, then you also need to formulate the CSR committee. So though that is not a requirement of SEBI LODR, that is a requirement of section 135 of the Companies Act, and the constitution of the CSR committee. Right, but these are the four committees that we are talking about over here. And then we also have the board of directors. And then amongst the board of directors, they will make this committee. Like, you know, in your college, there is some event. So now how many people are there in the event management team? There are 30 people in the event management team. But amongst these 30 people, do you create the different smaller teams also? Okay, you will take care of the advertisement, you will take care of the sponsorship, you will take place of the programs which are to be conducted, you will look into the chief guests which are coming to the program. So amongst the 30 people also, is the work divided? Yes. Can one person be a member of more than one of these committees also? Yes. Okay, you say, I look into sponsorship also, I look into the guests also, no problem. Or you say, no, I will only look into the sponsorship. Or you say, I will not be a part of any of the committee, I'll just be a part of the general committee. That also is possible. Not necessary that you have to become some committee member only. Are you able to visualize or understand? Okay, amongst the board of directors, do they divide the work? Amongst the board of directors, do they divide the work? Yes, right? So that is one part of our discussion in the chapter of the corporate governance. That is one part of our discussion wherein we need to discuss regarding the board of directors and then regarding these four committees over there. And the fifth committee doesn't come in our discussion in the chapter of the SEBI LODR. Then apart from that, the code of corporate governance has a lot of other requirements. What are the lot of other requirement? It says listed entities, and who has to follow the code? Listed entities. So it says listed entities, you should be having a code of conduct. Listed entities, you should be having a vigil mechanism, whistleblower policy. Listed entity, you should be having some control over your subsidiary companies. So if you are a subsidiary of the listed entity, you should be having some control over the resignation of the auditors. Control means some rules regarding the resignation of the auditors of the company. Listed companies, you need to get the secretarial audit done. You need to attach the secretarial audit report, right? Secretarial report, right? Then listed companies, what does it say? You need to do the limited review of your components. Then after that it says listed companies, you need to have a management discussion and analysis. You need to have a CEO CFO certification to be done, right? You need to have a CEO CFO certification to be done, right? So likewise, there are so many of those requirements which are there for a listed company. So one set of requirement is composition of the board of directors and then constituting these four committees: audit committee, stakeholder relationship committee, risk management committee, and then also the nomination and remuneration committee. You know, for each of this committee, what we have to study? Okay, what is the constitution of that committee? What is the number of meetings of that committee which should take place? What is the quorum for the meeting? And what is the role of that committee? What is the role of audit committee? What is the role of stakeholder relationship committee? What is the role of risk management committee? What is the role of the NRC, nomination remuneration committee? So for each committee, what I need to study? Constitution, meetings, quorum, role. And for each of the four committees. So are you getting those 16 questions over there? Right, 4 fours are 16, right? For each committee, I have to discuss 4 questions over there, right? Then in general, first I need to discuss about the composition of the board of directors. In general, first I need to discuss about the composition of the board of directors. There itself we have a very huge definition meeting this fellow who is called as the independent director. So again, there is a revision to the definition of independent director, right? Then in the other points, we also have a point regarding the related party transactions, right? Related party transactions and also related party disclosures. right? The related party disclosures, right? So this is just a menu card of what there might be other points also, but this is just an outline for you for what we are going to discuss in the chapter of the SEBI LODR. This is not all, this is some of it of what we are going to discuss in this chapter. What is the weightage of this chapter? Generally at least one question is seen in every exam from this particular chapter, like liabilities of auditor, visiting chapter, squirrel, may or may not come, that type. But SEBI LODR comes. And a 99% it comes. And if it doesn't come in theory, MCQ, though it will come. Somewhere you will see the relevance or the questions relating to SEBI LODR in the exam. Right? Huge chapter. Again, a lot of theory studied in this particular chapter. Right. And then again, before we start with the chapter of the corporate governance, let us look into Infosys. And in Infosys, let us look into the corporate governance report. Are you able to follow this? Right, what have I opened is the annual report of Infosys. Annual report, 363 pages. In the annual report, had we already seen the audit report and audited financial statements, standalone and console? Yes, now we are seeing the corporate governance report. Someday it would have crossed your mind, no? अरे 363 पेजेस क्या लिखते हैं इतना एनुअल रिपोर्ट में, है ना? That 300 pages, 290 pages, 250 pages, what do they write so much in the annual report of the company? Today you come to know, है ना, that so much of it is so regarding the corporate governance report only. So what does it say? Our corporate governance philosophy. Okay, so earlier, you know, that Narayan Murthy used to be heading, okay, the Infosys board and all of that time, right? That time until today also, Infosys is known to be one of the best when it comes to corporate governance, and they are known to be the best when it comes to corporate governance. And in between, when, you know, Narayan Murthy had put himself aside from the day-to-day management or decision making, he said, I am seeing some governance issues in the company, right? I'm noticing some governance issues in the companies or so. So governance means what? Something related to the management, relating to the board of directors of the company, that it is not being managed properly, right? So it says our corporate governance philosophy is a reflection of our value system, encompassing our culture, policies and relationships with our stakeholders. Integrity and transparency are key to our corporate governance practices. What? Integrity and transparency. Did I tell you transparency of financial reporting? Yes, and ensure that we gain and retain the trust of our stakeholders at all times, right? Corporate governance is an ethically driven business process that is committed to values aimed at enhancing an organization's wealth generating capacity. Mind blowing sentence. You understand now? It's an ethically driven business process that is committed to values aimed at enhancing an organization's wealth generating capacity. This is ensured by taking ethical business decisions, conducting business with a firm commitment to value while meeting stakeholders' expectations. At Infosys, it is imperative that our company affairs are managed in a fair and transparent manner. This is vital to gain and retain the trust of our stakeholders, right? We are committed to defining the governance practices at all levels, highest levels of the corporate governance across all our business functions, right? And then they talk about the principles of corporate governance, and client value, leadership by example, integrity, transparency, fairness, and excellence, right? Board as a trustee, okay, they say we are just as a trustee of the shareholders of the company. Responsible leadership, legal compliance, integrity, transparency, relationship with stakeholders, effective corporate governance, and the fairness and the excellence. Okay, right? Board as a trustee. Then they talk about the corporate governance guidelines, independent directors, right? The SEBI LODR. Did I tell you this? Listing obligation and disclosure requirement regulation 2015. That is the listing regulations, and they've given the definition of the independent director. Then the role of the board of director. Then the board composition, right? So what is the board composition in case of the Infosys, right? So it says, and the board has 6 committees, right? Which are the 6 committees of the board of directors? Audit committee, nomination remuneration committee, stakeholders relationship committee, risk management committee, and 2 extra committees, CSR committee and the ESG, the environment, social and the governance committee. And all committees comprise only independent directors, one of who is chosen as the chairperson of the committee, right? And the company is also having a cyber security risk subcommittee, which is a subcommittee of the Risk Management Committee comprising solely of the independent directors. Okay, right. Infosys, as at 31st March 2022, the board comprised of 8 members, including the non-executive and the non-independent chairperson, chief executive director, and the managing director, and 6 other independent directors. So, how many directors are there on the board of Infosys? 8. And out of that, how many are independent directors? 6 are the independent directors, and 2 are what? The non-executive, non-independent chairman, chief executive, and the managing director, and 6 other are the independent directors. Are you getting that? Okay, right. Then the size and composition of the board. So what does it say? Independent directors 25%, non-executive, non-independent director, executive directors 25%, then Indian and foreign national, then men and women, then the average tenure and the tenure of the directors, right? How long they have been being in the directorship of the company. Then the board meetings, so scheduling and selection of agenda items for the board meetings. Then the meetings of the independent directors. What does it say? At least once in a year, only the independent director should meet without the attendance of the non-independent directors and the members of the management. So generally now Infosys, like how many directors it has? 8 directors. Out of these 6 are the independent directors. It says at least one meeting should take place in the year of only of the independent directors without the presence of the non-independent directors and the members of the management. And again, there are matters which they need to discuss over there. The independent directors, they should meet at least once in a year. But how many times did they meet? They meet 4 times. Right, so have they complied with the requirement? Yes. Then responsible leadership. Right, so the chairperson, then the CEO and MD of the company, lead independent director of the company, then the key board qualifications, expertise and attributes. Right, so what are the requirement if you want to become a director in Infosys? Right, financial, diversity, global business, leadership, IT, mergers and acquisition, right, board service and governance, sales and marketing, ESG, risk management, cyber security. Right, so these are the criteria if you want to become a director in the Infosys. Then how do they select a new director? So the board delegates the screening and selection process to which committee? Nomination Remuneration Committee. Then the committee will decide a criteria. Then based on the criteria, they will search for the eligible candidates. Then based on the candidates, they will recommend the appointment of the director to the shareholder, and then the matter will be placed before the shareholders for the approval. So that is how you become the director. Then succession planning. Okay, right now he is the director, but after his term gets over, next who will be the director in the company. Then once you become a director, the training being given to the board members. Right, so the number of training hours which have been attended by the board of directors of the Infosys. Okay, then effective availability of information to the board members, attendance of the directors. Right, so how many board meetings took place over there? 8 board meetings. Right, so how many meetings took place, and then what was the percentage of the attendance? Right, so how many meetings are required? Not less than 4 meetings with a time gap of not more than 120 days between any 2 meetings. But here how many meetings have taken place? 8 board meetings have taken place. Then the governance of the board committees. So how many committees do they have? Audit committee, Nomination Remuneration Committee, CSR Committee, Environment Social Governance Committee, Risk Management Committee. Under that they have a Cyber Security Risk Subcommittee and the Stakeholders Relationship Committee. And so whatever we are studying, if you understand this, if you read this carefully, you'll very clearly understand the content of the chapter. Okay, right. So the board committees, and now they talk about one committee, right? So chairperson of the audit committee, he is the chairperson who is a financial expert, right? The committee comprises only of the independent directors. What are the objectives of this committee? Then the audit committee charter, then the process adopted by this committee. Then how many audit committee meetings were held in a year? So how many audit committee meetings are required? Again 4. But how many audit committee meetings they held? 7 audit committee meetings. And again the activities of the committee during the year, right? So quarterly, annually, or periodically. So what are the activities? Annually, quarterly, or periodically. Then the recommendations of this committee. Then next committee is the nomination and the remuneration committee. Again the objectives of this committee, how many meetings were conducted during the year, and again what were the activities of this committee, quarterly, annually, and periodically. Are you understanding that? Next one is the CSR committee. Again, CSR committee, how many meetings, and again the CSR report has been separately attached. Then the ESG committee. So again the objectives of this committee, right? Then again the composition and the attendance at the meetings, and what are the activities of this ESG committee. Are you understanding? Then the risk management committee, right? Then risk management, how many risk management committee meetings? At least twice in a year. Here how many meetings they've had? 4 meetings in a year. And these are the members of the risk management committee. And what are the activities of this committee? Then the cyber security risk subcommittee, right? So again this subcommittee, again how many meetings in a year, right? So and again this next one is the stakeholders relationship committee over there, right? So do you come to know what is it that they are writing in the corporate governance report or in an annual report of the company, right? So much of this content. Then apart from that, how do you select a board member? So board member evaluation. Then once he becomes a director, then do you evaluate his performance also? So before he becomes a board member, you evaluate him. After he becomes a board member, still do you evaluate his performance? Yes. So again, independent directors evaluation, how they are evaluated. Are they able to contribute? Are they able to contribute for international best practices? Do they have active participation? Do they commitment to fulfillment of director obligation? So evaluation of the performance of the independent directors. Are you getting? One evaluating the director, then evaluating his performance as an independent director. Okay, right? Then also it talks about the executive leadership compensation. So now talking about the compensation, the remuneration being paid to the directors of the company, right? The remuneration being paid to the board members, right? So fixed board fee, that is 1.144 crore, right? Then the board committee attendance fee, chairperson audit committee, members of the audit committee. So what is the remuneration being paid to all of them, right? So the remuneration only for the purpose of attending the meetings, and then the sitting fees, what we call it as, and the travel fee, incidental fees, and the lead independent director. Okay, and now this is the remuneration being paid to the directors, right? So what does it say? Non-executive, non-independent director, nothing, right? Then executive director, what does it say? Total rupees in crore, right? What does it say? He has perquisite, stock option, and an ESOP of the company of 52 crore, right? So that is why total comes to 71 crore. And what is the base salary? 5.69 crore, right? And the other executive director, 2.95 crore, right? And the independent directors, do they get any salary or so? Do they have any stock options in the company? No, they only get the commission, right? They only get the sitting fees and they get the commission, right? So the remuneration being paid to the executive directors and the remuneration being paid to the independent directors. Are you understanding that? Then employment agreement with the executive directors. Then the total fees being paid to the statutory auditor. How much fee is being paid? 22 crore. 18 crore audit fee, tax audit fee 3 crore, and other 1 crore. Right, so total fees being paid to the statutory auditor, right? Then coming to the relationship with the stakeholders. So bonus issues and the stock split, which has happened, right? Obviously, there is a reason why I'm discussing this report with you. You understand? No, it will make the chapter very convenient for us to study. Those of you who don't see this report now, right now, later on chapter will not make sense to you. Okay, right. Then unclaimed dividend. Did we just study about the unclaimed unpaid dividend over there? Right. So what does it say? Is it to be given on the website of the company and also should be given in the annual report of the company over there? Yes. The following table provides a list of years for which unclaimed dividend and their corresponding dividend, which would become eligible to be transferred to the investor education and protection fund, right? So when it will become eligible for transfer, and so it says 1 crore 49,88,448 rupees for dividend declared in 14-15 will be eligible for transfer on July 23, 2022. Example, right? So likewise 21-22 the interim dividend, then dividend remitted to the investor education protection fund. So what amount has been transferred to the IEPF? Then shares transferred to the IEPF, right? So what are the investor awareness being created? Investor grievances and investor contact, right? Registered office, legal proceedings. Okay, then what is the share capital of the company? How much of buyback of shares? ESOP allotment has been done, right? Then the total number of shares of the company, company, how much are the portfolio investors, insurance company, qualified institutional buyer, ADR, the American depository receipts, mutual fund, promoters, and the resident individuals and the others. Right, so that's the breakup of the shareholding. Then shareholders holding more than 1% of the shares, right? So which are the shareholders holding more than 1% of the share? LIC, SBI Mutual Fund, Government of Singapore, and so, right? HDFC Mutual Fund. Then distribution of the shareholding, then the dematerialization of the shares and the liquidity. So it says 99.88% has been dematerialized. Some people, they still have the physical format of the shares. Then listing on the stock exchange, right? They are listed on NSE, BSE, and the New York Stock Exchange, right? Then again the share pricing, the stock market data, the exchanges in India, right? Then the New York Stock Exchange, right? Then the American depository receipts, right? Premium compared to the price quoted over there, right? Then share price, credit rating, right? They get the credit rating from the Moody's, Standard and Poor's, Dun and Bradstreet, and the Chrysler, right? And what are the different credit ratings that they have received over there? Stable, condition, strong, and stable. And so credit ratings received. Then the shareholders, communication to the shareholders. Quarterly report has been given to the shareholders. Quarterly and annual financial statements are given. Earning calls with analysts are done. Right? Shareholders also have access to the corporate governance policy. Then general body meetings and the postal ballots. Right? So whatever postal ballots and so were conducted. Right? Then after that you have the CEO, CFO certification. Again, this is one more heading. And okay, in the corporate governance, what is one more requirement is regarding the right CEO, CFO certification. Then there is a requirement regarding the code of conduct, right? Then the whistleblower mechanism. Did I discuss these headings with you? And the whistleblower mechanism. Then the auditor certificate on the corporate governance, certificate from the company secretary in practice, another secretarial audit report, right? The secretarial audit report. And then this is the certificate from the company secretary in practice. What does it say? In pursuance of the Schedule 5 to the SEBI LODR and on the basis of the written representation declared received from the directors. What does it say? None of the directors of the company are disqualified from being appointed as a director. Right? So this is the representation that none of the director is disqualified. Then the investor contacts, right? Then the depository banks, address of the stock exchanges. And then after that you have the risk management report. Right, so far whatever I discussed or showed to you over here, what was that? That was regarding the right, the corporate governance report. Then as a part of it, what do they have over there is the risk management report. Okay, right. Now, is the auditor required to issue a report on corporate governance? Yes, can the statutory auditor of the company issue a report on corporate governance? Yes, even the statutory auditor can issue a report. So what does it say? Independent auditor certificate on the corporate governance to the members of Indian Oil Corporation Limited. We have examined the compliance of the conditions of corporate governance by IOC, the company, as stipulated in Regulation 17 to 27 of the SEBI LODR and the guidelines on corporate governance. Yes, the preparation of the corporate governance report is the responsibility of the management. Management along with the board of directors are responsible for ensuring the conditions of the corporate governance as stipulated in the SEBI LODR. What is auditor's responsibility? We have conducted our examination of the CG report. We have complied with the requirements of SQC 1. The procedure selected depends on the auditor's judgment. Procedures is not limited to verification of secretarial records and financial information. We have also obtained the representations and the declarations from the directors. The procedures also include examining evidence supporting the particulars in the CG report. And in our opinion, and to the best of our information and according to the explanation given to us, we certify that the company has, in all material respect, complied with the conditions of corporate governance as stipulated in 17 to 27, yes, as well as with the guidelines. Now, had it been a clean report, the report would have ended, the opinion paragraph would have ended over here. Had it been a clean certificate, okay, the company has complied with the conditions as stipulated in regulation 17 to 27. But what I have found out for you is a qualified certificate over here. What does it say? Except for the following. Regulation 17(1)(a) of SEBI LODR with regard to having not less than 50% as the non-executive director has not been complied with. Then regulation 17(1)(b) with regard to composition of board of directors comprising of at least 50% 50% independent directors not complied with. And in view of the exemption to government company, review of performance of the non-independent directors has not been done. Right, review of performance. So these are the requirements of corporate governance which have not been complied with by IOC, the Indian Oil Corporation. Are you understanding that? Yes, and other matters. We further state that such compliance is neither an assurance nor as to the future viability nor the efficiency or effectiveness of the management. The certificate is intended only for the members of the company and we are not responsible for any others. Right, and who has signed these reports? 4 auditors over there. Right, Mathur and Company, Mehta and Company, Singhi and Company and the Singhi and Associates. Right, and dated July 14, 2021. Right, this is for the Indian Oil Corporation we are seeing. They are having the 4 joint auditors over there. Are you seeing that? Independent auditor certificate on corporate governance. What I am showing you over here is the qualified report, right? What are we seeing over here is the qualified report. Again, this is another company, Unitech, right? But now what we'll see, now that we've seen one report, we at least have a rough idea regarding what is there in corporate governance. Now we look into the discussion of the chapter and wherever required, then we'll come to the reports. Right, so is it okay, clear, starting point of the chapter for everyone? Right, every chapter, yes, very difficult to extract a mark from that particular chapter and a very challenging. Right, so you came to know at least 100 pages in the report today. Annual report of the company, at least what are the things they are writing in the annual report of the company, and are you dreaming like to become a director in a company or something like that? You see so many qualifications and expertise which are required over there. Okay. Right. So now let's come to our chapter. Word by word, page by page, let us finish with our discussion of the chapter. Right. So what is corporate governance? It is the system by which the company is directed and governed by the management in the best interest of the stakeholders, in the best interest of the stakeholders. And who is responsible for the governance of a company? The board of directors are responsible. Okay. Issues of corporate governance, I'll come to that at the end of the chapter. Issues of corporate governance, to that heading I will come to it at the end of the chapter. And some students are like that, night insects. Some insects, when it is night, it is silent. No, no, some noise keeps on coming. Like that, they keep on, humming. Some, I don't know what they have to say. क्या बोलना है? Even like I also want to know, okay, what is it? That they're like, sometimes there's a mosquito also around, then it will keep on coming near your ear and it will keep on making that sound over there. Some students are like that background music and something looking here, looking there. Arey nahi, no, not to be done, not allowed, disqualified. You understand that? Disqualified to be a director, disqualified to be an auditor, disqualified to be a student, disqualified to be a chartered accountant. Not allowed. And you have to be eligible to become a member of the institute. And eligible only when you are like a soldier. Okay. Right. So issues of corporate governance. Gun. Still they will do. Oh my God. They'll go on and on and on. Oh my God. I wish somebody would have told me that you don't speak, that student will come here and teach the chapter. Okay, right. So issues of the corporate governance, we will study towards the end of the chapter. What are you talking to your friend? Look in the front, sit straight in the class. Okay. Very important chapter. I have to get an exemption from each one of you in audit. I want to say that my students have got good marks in audit. So for that, I am working hard. You also need to work hard. You understand that? Please, you have to make my day on the day of your result. My result, my day already done. You understand? No, that is history now. Okay, that day you can never forget in your life. The day when you see that PASS. Oh, it's like just, it's like heaven, ecstasy, it's a different level of joy. And if you get a rank on top of that, it is like unexpected. And it's like a surprise for you over there. Okay, oh, no, you like pass is important, right? The pass over there is very important. Okay, so like when I had written my foundation exams, I'd got 299 out of 400. So I had missed my rank by 1 mark. Anyways, I'd never thought also that I will get a rank, but I'd missed it by 1 mark over there. Inter, I don't exactly remember the marks now, but I had missed my rank by 10 marks over there also. Final, there was no thought also of a rank because simple, CLEAR, clear. I just wanted to clear the exam. That was the only and only target, mission, objective, whatever over there. 15 June 2008. These dates are like written in the history of my life. You understand? No. 15 June 2008, Deloitte gave me the leave for the, for preparing for the exams. Before that, I had found out one library where I'd studied for inter also. And then from 16th of June, started going to the library. All the dust which was there in the books, which I had done the classes in 2006 and 7, all that dust I had to remove. And then take those books in the library, take a locker in the library and all of that. And then after that, start studying. Start studying, first 2-3 days went in planning only. And first 2-3 days sitting in the library for 1 or 2 hours, then coming out, then sitting, then again coming out. Not able to, because 2 years you've been in the corporate world, all of a sudden somebody telling you to sit at one place, not getting a control of the situation, not believing that you've already done a class for this. You understand? No, not 2006 did class on FRSFM. Now in 2008, when I'm sitting in the library, what I will remember? Only because it was my handwriting, I had to believe. Okay, I've done the class. Otherwise, there was no reason to believe. And then 15th of June, 16 June 2008, started picking up the momentum slowly, 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 slowly. Right, finished I don't remember the deadlines, but yeah, by some September, I finished with my first study of all the subject. Then did the revision, then decided to write a test series, right? So October, I wrote the test series also. Then 1st November, the exam was there. So exactly 4.5 months and exactly 8 papers. You understand? 16th June, the exam leave started, and 1st November was the first paper. And it was all 8. I was writing both groups together. And then 1st November, the exam started. Up to that, preparing, revising, RTP, and the model test paper. That time it was not mock, it was a model test paper. And the suggested, looking into all of that, studying DT, studying ISCA, studying law, studying FR, SFM, in the library, seeing this student is using this module, this student is using this note. For me, one thing is very good in life. I remain unaffected. It doesn't matter to me. You are using any author book, very good. They say, "अरे वो book बहुत अच्छा है." अच्छा है तो अच्छा है. It doesn't matter. They say that book is very good. This book is very good. Hey, you are not studying from that book. How come you will pass? अरे, it doesn't depend on the book, Ray. No guarantee. No book will give you a guarantee of clearing the exam. For me, it wouldn't used to make a difference only. Nobody used to ever come to ask me any question or anything because I used to be insulated, not talking to the entire world. I used to quietly go out in the break. I used to eat my lunch in 5 to 7 minutes and I used to come back and sit back into the class for studying again. Again in the evening, 5 o'clock, I used to go. I used to carry one apple with me. That one apple I used to go. Everybody in the library knew that now she's going out to eat the apple and she'll come back. But I had no connection with anybody in the world. I'd cut all my connection with everybody in the world. Like morning 7 o'clock, I used to reach to the library. I used to be standing over there even before the gate of the library used to open. You understand? Now I used to be ready over there. Then 7 o'clock I used to sit. Almost till 9 o'clock in the evening, night, I used to study over there. After 9 o'clock, reach home. Then after that, just take a stock of the situation. Okay, today what I have studied, today what is yet to be, tomorrow, what I've missed out studying, tomorrow what I need to study, which books I need to carry to the library tomorrow, eat little bit food. Generally, people, they put on weight while preparing for the exams. I have always been losing weight whenever I prepare for the exam. I just can't eat food when there is so much to study or something like that. Okay, so then I used to eat whatever food, little, whatever was required for survival or something like that. And then after that, 10:30, 11 sleep. Next day morning, again get up at 5 o'clock, 5:30, prepare, get ready, go to the Library, 7 o'clock, open the shop. Again, right, night, 9 o'clock, shut the shop. Saturday, Sunday, then, and November attempt is very dangerous because Ganpati comes, Rakhi comes, Rakhi celebration, then Ganesha festival, then Navratri festival comes, then Diwali comes. Oh my God. And then there are many other events also at that time. Okay, so then that is, May season, May fest, only mangoes are there, nothing else is there. The only mangoes to be eaten where you eat the mango and you feel sleepy. But this November attempt, no, is a very, very different attempt. Because there's so many festivals and festivities and so many things happening over there. But like nothing. I didn't take any break, no Saturday, no Sunday, no difference for any of the day or for any of it. And I'm telling you, the day of the result, 16 Jan 2009, when I saw that PASS in the first attempt and luckily an all India rank also, it was like, it was all worth the effort. It was all worth the effort. Means it never felt, why did I, why did I punish myself so much? Why did I torture myself so much? Like there was one point of time where my eyes had become so dry in between. I'm just trying to talk to you about some other things. Like my eyes, because that reading and studying and again, like, if I get a scratch over here, there is a wound which happens over here, like a brown color thing which will come on top of the wound. Something like that had happened inside my eye, inside. Okay, so even when I used to blink my eye, no, it used to hurt. I don't know how by reading or scratching or something it had happened. It was so terrible. I couldn't even, like I had gone to the doctor once or twice. He said, your eyes need rest. Like right now for the classes, after the classes, they tell me that your throat needs rest. Okay, that time it was, my eyes which required the rest. I could not keep my eyes open at some point of time because it was not healing. I was not taking rest only, but it had to give up. I did not give up. You understand? No, it healed. It healed in its own. I continued my study over there, and then I could clear the exam. So then, what day of the law paper, day of the law paper, I still remember that one of my very close friends, she's still a very close friend to mine. She just sent me a message. Now I generally keep my phone switched off, but just before entering into the exam hall, I used to go from the library to the exam hall. You just, check your phone or something like that. And that friend of mine message, okay, mom passed away. Okay, and now I'm about to, her mom passed away, she messaged that. Okay, and now I'm about to enter into the exam hall, and then all of a sudden, all those thoughts, about her mom and about how what she might be going through and what. Now, this was unexpected. I never opened a phone with such a expectation of any such message or it will divert. Even one of my friend asked that you look disturbed today. What happened to you? Now, what to say? Now, I'm trying to avoid the thoughts, but still the thoughts, matlab, and it was a sudden death. It was not like somebody who's dying of old age or something like that. But again, that was an unexpected event which happened. Like it happened in my attempt. I'm just giving an example of what could happen. But even under those circumstances, I remember then in law paper, I did one mistake over there. Okay, where there was a question asked to do the drafting, I wrote the provision and came. Because one student came after the exam hall and said, "Arey, wo draft karna tha." The drafting was to be done. I said, where drafting was there? I so wrote the provision and came. Then I realized my mistake. So somewhere the attention gets disturbed, it gets distracted. So you need to keep some safety of margin for these last minute bumpers also. Sometimes you don't feel well. You understand? No, something goes wrong with you. Your immunity goes low. You don't, that sleep, that acidity, all your, the setup of your body, the mechanism, the pressure, it takes a toll on you at times. So even you need to make a provision for these adverse circumstances which you will go through. Which you will go through. If you talk about an all India rank one or something, for them getting, obviously they do a lot of hard work. There is no compromise in the hard work. But for them, it is a cakewalk because they are by default genius and intelligent and studious, and they are the material for doing the CA. They have the content of, preparing for these competitive exams. But everybody is not blessed in the same manner. All five fingers are not the same. You understand? No, what worked for them is not going to work. You also might be one of them. You also might be that genius or intelligent person, or you may not be that. Every person, like I had never thought that I will get a rank, or that I will. You can never have the confidence that you'll clear in the first attempt or so. But yeah, if it can happen with me, I tell very simply, it can happen with anybody. Simple. If I can clear my exams in the first attempt, but I can tell you one thing, what message I'm trying to pass to you over here is about the dedication and the sincerity which is required. And I'm not talking it from some philosophy book or some motivation book or something which I have not done myself. It is something which I have done myself, and it is something which I have done myself, and I have seen that it gives the required results. It gives, the happiness which you see on your parents' face, to tell everybody that you have cleared your CA exam and to say that you are now a chartered accountant, that is a very, very great and a very joyous thought. Like right now, if whatever is your name, I just take the example of the name Neha. So right now it is like Neha is drinking water. But once you become a chartered accountant, it is CA Neha who is drinking water. You understand? No, right now, say Neha went out of the class. Later on, CA Neha has gone out of the class. You understand? It will make a difference in your, what do you say, in your dignity in the society. And to tell anybody also, they'll say, okay, this is not Neha, this is CA Neha, or this, she's a chartered accountant. Before your name also, or rather than telling your name, instead of your name, they'll say she's chartered accountant, and she's my friend, she's a CA. You understand? No, that's the difference which will happen in your life once you become a chartered accountant. So my most important burning desire or wish for all of you is that all of you should become very, very successful chartered accountant. Then you should become these independent directors in the company, and then I should be showing these annual reports in the class, and then in those annual reports your name should be seen in those annual reports as being the independent directors of the company. How's the idea? Okay, right. So that's what's the idea. Okay, right. So issues of corporate governance we will discuss towards the end of the chapter. Now let us come to the applicability of the LODR. Right. So first question which we study, issues we will study towards the end of the chapter. Now we are coming to the applicability of the LODR, right? So to which entities LODR is applicable? Listed entity. Array, but listed what? We say LODR is applicable to listed entity, but listed what? It says any of the following designated securities on a recognized stock exchange. Now, what do you mean by the designated securities? Designated security, one means the specified securities, non-convertible securities. Specified securities which are listed on the main board, SME exchange, or the innovators growth platform. So again, this is candidate for MCQ. This chapter is filled with MCQ. Right? So to whom LODR is applicable? Listed entity, which has listed any of the designated security. In the designated securities, which are the first two securities you have over there, the specified securities and the non-convertible securities. Are you understanding that? Right. Then you have the Indian depository receipts and the units securitized debt instruments. Right? So Indian depository receipts and the securitized debt instruments. Right? So Indian and instruments. Right? So those are the next two over there. Right. Then you have the units issued by the mutual fund, the security receipts, and any other securities as may be specified by the board. Which board are they talking about over here? Right, SEBI, the Securities and Exchange Board of India. Wonderful. Right, so which has listed any of the following designated securities on the stock exchange. Which securities? Specified securities listed on the main board, SME exchange, or the startup, the innovators growth platform. Then the non-convertible debts, the non-convertible securities. So securities. Then it says the Indian depository receipts and the securitized debt instruments. Then the units issued by the mutual fund and the security receipts and any other securities as may be specified by the board. Okay. And here, yes, for NFRA, what we had studied, applicability, once applicable for 3 years, even after it becomes non-applicable. Here, what does it say? Once applicable, always applicable. Right? The provisions of these regulation will become applicable to a listed entity on the basis of the market capitalization criteria on the value of the outstanding listed debt security shall continue to apply to such entities even if they fall below such threshold. Right? So here what does it say? Once applicable, always applicable, even though if you fall below the threshold. Okay. And now some of these provisions, which are regarding the SEBI LODR are also applicable to the HVDL. Nowadays, HVDL is trending in the exam. What is HVDL? It is the high value debt listed entity. right? HVDL, it is trending in the exam. What is HVDL? It is the high value debt listed entity. What is high value? Which has issued non-convertible debt securities of 500 crore and above is called as a HVDL. Non-convertible debt securities of 500 crore and above is equal to high value debt listed entity. Right? Because what is the second point which we had studied in the applicability? Non-convertible security. And now if you've issued non-convertible debt securities of 500 crore and above, then you are considered to be an HVDL, a high value debt listed entity. And what does it say? Unless specifically exempted, all the provisions which are applicable for equity are also applicable to them also. Them also means the HVDL also it is applicable. So whatever is applicable to equity is also applicable to the debt, unless it is specifically told that this is not applicable to HVDL. Like at some places we'll see, okay, for equity, normally it is applicable that you have to declare the results on the quarterly basis. But it says if you are a HVDL and a high value debt listed entities, then it is applicable on a half yearly basis. So normally for everybody, how it is applicable? Quarterly. If this would not have been written, even for high value, it would have been quarterly. But because it is specifically given, okay, if you are a high value debt listed entity, then these reporting is to be done on a half yearly basis. Right? It says normally the reporting is to be done on your standalone and console result. Right? It is to be done on your standalone and the console result. Then it says if you are a high value debt listed entity, then it is to be done only on your standalone result. Are you understanding that? So wherever there is an exception for the HVDL, it is specifically given. If it is not given, that means equity listed or debt listed. Provisions are the same. Same provisions of LODR are applicable to both. Are you able to follow this? Same provisions of the LODR are applicable to both. Are you understanding that? The high value debt listed entity which has non-convertible debt securities of 500 crore and above. Are you understanding that? Okay. Right. Then what does it say? Provided further that these provisions will be applicable to an HVDL on a comply or explain basis till 2023 and on a mandatory basis thereafter. Right, so till that voluntary, after that mandatory. Okay, then an HVDL. What is HVDL? High value debt listed entity. That is a real estate investment trust. What does it say? The board of the manager of the real estate investment trust will comply with the requirements of regulation 15 to 27. Because who has to comply with the code of corporate governance? The board of directors. Now in case of an HVDL, which is a real estate investment trust, that is, it is investing in the real estate, who will comply with the code of corporate governance? The board of the manager of the real estate investment trust. And in case of an HVDL, which is an infrastructure investment trust, who will comply? The board of the investment manager of the infrastructure investment trust will comply with the regulation 15 to 27 of these regulations related to corporate governance. So, for me, what happens when I teach the chapter of the SEBI LODR, every sentence in the chapter is an MCQ. Every sentence in the chapter is an MCQ. Not even a single sentence which cannot be converted into an MCQ question in the exam. Are you understanding that? So high value debt listed entity, number one, non-convertible debt securities of 500 crore and above. Then what does it say? All provisions applicable to them also, which are applicable to equity unless specifically told that they are not applicable to them. Then what does it say? Up to 2023 may comply. After that, mandatory to comply. Then in case of an HVDL, which is a real estate investment trust, the board of the manager will comply with the code. And then in case of an infrastructure investment trust, the board of the investment manager will comply with the code. Code means the code of corporate governance. Are you understanding that? Okay. And then what does it say? Report on corporate governance. The listed entity shall submit a quarterly compliance report on the corporate governance in the format as specified by the board, right? Which board? The Securities Exchange Board, to the recognized stock exchange within 21 days from the end of each quarter. So again, this is MCQ. Right, listed entity, what you have to do? Did I just show you the corporate governance report? Did I show you the Infosys ka corporate governance report? It says this report has to be submitted by the listed entity to the stock exchanges in the format specified by the board. Yes, within 21 days from the end of each quarter. So June, September, December, March. That is by 21st of July, 21st of July, 21st of October, 21st of January, and 21st of April. है ना, June, September, December, March are the quarters. So 21 days from the end of each quarter, they have to submit these to the quarterly compliance report to the stock exchanges in the format specified by the board. Okay, and this report has to be signed by either the compliance officer or the chief executive officer of the listed entity. I think I told you about an MCQ for this one. Okay, it says this corporate governance report is to be signed by whom? The CEO and the CFO of the company, or to be signed by CEO or the CFO of the company, compliance officer and the chief executive officer of the company, or compliance officer or the chief executive officer of the company. So by whom it is to be signed? By the compliance officer or the chief executive officer of the listed entity. What is auditor's responsibility? Auditor needs to certify that whether the company has complied with the requirements of the corporate governance. Did we see the IOC report? Indian Oil Corporation, did the auditor issue a certificate, independent auditor certificate on corporate governance? And obviously this certification is neither an audit nor an expression of the opinion, and it is no assurance as to the future viability nor the efficiency or effectiveness with which the management has conducted the affairs of the company, right? That we say for audit also, that we are saying for this certification also, right? So everybody, are you with me for the discussion of the corporate governance? Right. So now coming to the first discussion, did we draw an outline of the chapter also over here? Okay, mainly what we are going to discuss is the board of directors. Then the audit committee, SRC, RMC, NRC, and then these are some other points which we need to discuss. So what is the first point which we need to discuss? The composition of the board of directors, right? So what does it say? Every listed entity. Now you know who needs to comply with this code. Have we discussed the applicability of LODR? Have we discussed the applicability of the LODR? Yes. So now what does it say? All of those entities should have an optimum combination of executive and non-executive directors. They should have a optimum combination of executive and non-executive directors, with non-executive directors being at least 50% and having at least one woman director, with at least one woman director and not less than 50% being the non-executive directors. And then next requirement, top 1000 listed entities need to have an independent woman director. Right, top 1000 listed entities need to have an independent woman director. Right, so now what are we talking about over here is the composition of the board of directors. What is the composition of the board? It should be a optimum combination of the executive and the non-executive directors. Then what does it say? At least 50% should be the non-executive directors. Then there should at least be one woman director. Then top 1000 listed entities, there should be at least one independent woman director. So every listed entity, should it have a woman director? Yes. And top 1000 listed entities, they should have at least one independent woman director. Are you understanding that? Right. So every listed entity, woman director, and top 1000 listed entities, at least one independent woman director. Are you able to follow this, everyone? Right. Then the minutes of the meeting will help you to decide whether a director is an executive or a non-executive director, right? The minutes of the meeting. Then, yes, do you know this concept of the superior right equity shares? Outstanding superior right equity shares. You know, generally what it is, one share is equal to one vote. And if I am having one share of the company, how much voting I can do? I can give one vote. But then this with a superior right equity share, it is one share is equal to 2 up to 10 votes. So all other rights and privileges are like the other shareholders, but the superiority is only with respect to the voting. The superiority is only with respect to the voting. Are you able to follow this, right? The superiority is only with respect to the voting. So what does it say? In case of the company is having the outstanding superior right equity shares, right? Outstanding superior right equity shares, then what does it say? At least 50% should be the independent directors. I hope you get the words which I'm writing there. ED is what? Executive director. NED, non-executive director. WD, woman director. IWD, independent woman director. And if the company is having outstanding superior right equity shares, then what does it say? At least 50% should be the independent directors. Are you understanding that? Okay. Now, if the chairperson of the board, you have to check whether the chairperson of the board is the executive or is the non-executive. The chairperson of the board is the executive or is the non-executive. If the chairperson of the board is executive, then again what does it say? At least 1/2 independent directors. If the chairperson of the board is non-executive, then you need to check whether he is regular or whether he is not regular. Regular means in the context of attending the board meetings. If he is not regular, then again what does it say? 1/2 independent directors. If he is regular, then you need to check whether he is related to the promoters or to people who are one level below the board. Again, in that case, what does it say? 1/2 independent director. And if he is regular and is not related to the promoters or to people who are one level below the board, then only in that case it says at least 1/3 independent director. So only in that combination 1/3 independent director. In all other cases, what does it say? 1/2 independent director. And if company is having outstanding superior right equity share, then the story is over. Anyways, they need to have 1/2 independent directors, 50% independent directors. Are you able to follow this? If the company is having superior right equity shares, then anyways that is the blanket condition. Then so you have to have the 1/2 independent directors. But otherwise, what is the combination over there? Only for the combination of the NRNP. What is NRNP? Chairperson who is non-executive but who is regular and he is not related to the promoters, then you can have the 1/3 independent directors. In all other cases, you need to have the 1/2 independent directors. Are you able to follow this? If chairperson is non-executive but he is regular and he is not related to the promoters, then 1/3 independent directors. And in all other cases, it is 1/2 independent directors. So easy to remember this way, na? Okay, for NRNP, it is 1/3 independent directors. All other cases on the earth, it is 1/2 independent directors. Is it clear to everyone? Okay. So if the company is having outstanding superior right equity shares, at least 1/2 of the board should comprise of the independent directors. And did I discuss with you this NRNP? Right? What is NRNP? If the company is having the chairperson who is the chairperson who is the non-executive but regular and not related to the promoter, right? So chairperson is non-executive, regular, but not related to the promoter. Then what does it say? 1/3 independent directors. In all other cases, it has to be the 1/2 independent directors. Is it clear to everyone? Only in this case, it will be 1/3 independent director. All other cases, it will be 1/2 independent directors. Then what does it say? Top 2000 listed entities shall have not less than 6 directors. So top 2000 listed entities, what is the requirement? Not less than 6 directors. For top 2000 listed entities, what is the requirement? Top 2000 listed entities, not less than 6 directors. Then, if you want to appoint any person as a non-executive director who has attained the age of 75 years, that cannot be done unless and until a special resolution is passed to that effect. So, you want to appoint a non-executive director whose age is more than 75 years, what is required is a special resolution is required to be passed for the same. So non-executive director who's attained the age of 75, and if you want him to continue as a non-executive, so he cannot be. Non-executive director also, what does it say? Special resolution to be passed to that effect. Okay. Then once the directors have been appointed or any manager has been appointed, approval of the shareholders for the appointment of a person on the board or as a manager. So not only board member but also a part of the management. That means what? Not only TCWG but also the management. What does it say? Approval of shareholders for the appointment of any person on the board or as a manager has to be taken at the next general meeting or within a period of 3 months, whichever is early year. Right? So approval of the shareholders, right? Approval of the shareholders for the appointment of the director or the manager has to be taken at the next general meeting or 3 months, whichever is earlier. Next general meeting or 3 months, whichever is earlier. Are you all with me? What are we studying? The composition of the board of directors. Okay, right. So earlier it was proposed that he should be appointed as a director in the company. However, this was not accepted by the shareholders. It was not accepted by the board. It was not accepted by the shareholders. Who was to be appointed as the director? E. But they say, no, useless fellow, don't appoint him. Now again they are saying, no, 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 he is not useless fellow, he is a good fellow. You appoint him. So now which person they want to appoint on the board? A person who was earlier rejected by the shareholders at the general meeting. Yes, who they want to appoint as a director, managing director, whole-time director, or as a manager, who they want to appoint, who was earlier rejected by the shareholders. It says it shall be done only with the prior approval of the shareholder. So normal case mein what it says, that you can take the approval of the shareholders in the next general meeting or 3 months, whichever is earlier. But in case if you are appointing such a person as a managing director or a whole-time director or a manager who was earlier rejected by the shareholders, then it has to be done with the prior approval of the shareholders. R raised to 50. Right, super important. Right, then what does it say? A prior approval of the shareholder. Shareholder approval means the general meeting. General meeting means, will the notice of the general meeting go? Right, in the notice of the general meeting, the nomination remuneration committee has to give the detailed explanation and justification. Okay, why still he should be appointed or reappointed. Right, so prior approval of the shareholders in the general meeting means, will a notice go for that general meeting? Yes, in that notice what should happen? A detailed explanation and justification should be given by the NRC, you know NRC, Nomination and Remuneration Committee, and the board for recommending such a person for appointment or the reappointment, right? So these 2 points these 2 points over here are R raised to 50. Are you all following what we are discussing over here, right? So earlier rejected and he is to be appointed. Then what did we say? Right, earlier rejected, then it is to be, right, so earlier rejected, if I write it with a different color over here, right, earlier rejected, then it requires the prior approval. Earlier rejected as managing director, whole-time director, or the manager, not as director simpliciter. Then it says the prior approval of the shareholders will be required, and it says in the notice of the general meeting the detailed explanation justification is to be given by the nomination remuneration committee and the board of directors regarding why still they want to promote, or support that he should be appointed as a director in the company. Okay, why still he should be appointed as a director in the company. Are you able to follow? What we are discussing is the composition of the board of directors. Okay, then what does it say? There should be a separate post, and the listed entity may appoint. So again, it is not mandatory, it is recommended. What does it say? The listed entity may appoint separate person to the post of the chairperson and the MD or the CEO in such a manner that the chairperson will be non-executive and he should not be related to the MD or the CEO of the company. So what is the next point that they are saying over there? That you need to have the separate post for the, right, separate post of the, right, chairperson and the MD and the CEO of the company, separate people. Okay, you are, Mr. A is the chairperson and Mr. R is the MD CEO, that type, separate post. In such a manner that chairperson should be a non-executive director. So do they want him to be an executive director? No. What they are suggesting, better if he is the non-executive director. And second, he should not be related to the managing director or the CEO. That means he should not be related to R. So create a separate post for chairperson and MD CEO in such a manner that chairperson is non-executive and he is not related to the MD or the MD and the CEO of the company. right? MD, CEO of the company, right? So again, this is a new point over there, NEW, new. And this point was not there before, right? What was new? This earlier rejection, that was NEW and R raised to 50. Even separate post is NEW. And how do you decide top 1000, top 2000 listed entities? It says based on the market capitalization as at the end of immediately preceding financial year. And so we said no, top 1000 listed entities need to have an independent woman director. Top 2000 listed entities should have not less than 6 directors. So how to determine that? It says based on the market capitalization of the immediately preceding financial year. Okay. One person, he can become a director in how many companies? It says one person, he cannot become a director in more than 7 listed entities. And obviously, if I cannot be a director in more than 7 listed entities, obviously I cannot be an independent director in more than 7 listed entity. I don't understand the reason behind the 2 points being created over there. So it says maximum I can be a director in 7 listed entities, and maximum I can be an independent director in 7 listed entities. And if I am a managing director, whole-time director in any listed entity, then I cannot be an independent director in more than 3 listed entities. So what you have to remember over here is 773. One person, he cannot be a director in more than 7 listed entities. One person, he cannot be a director in more than 7. Yes, it cannot be a director, independent director in more than 7 listed entities. And if you are a MD or a WTD, then you cannot be an independent director in more than 3 listed entities. Then you cannot be an independent director in more than 3 listed entities. Are you understanding till everybody till here? So this was the first heading which we had over there regarding the composition of the board. Now what we have is the obligations with respect to the employees. Then we have the point regarding the definition of the independent director. Then we have regarding the remuneration and the approval of the remuneration of the directors. And that will complete our discussion regarding the board of directors. And then we will start meeting the committees, wherein the first committee is the audit committee, right? So let's take a break. Okay.